Are you curious in Charlie Munger's Tesla investment? You've arrived at the proper location. Then, in this video, we examine the rationale behind Munger's recent commendation of the electric vehicle manufacturer, a reputable figure in the banking industry. We look at the possible causes of Munger's shift in opinion about the company, from the shortened delivery time to Tesla's impressive growth. We also talk about Munger's opinions on Elon Musk, the overvalued valuations of Tesla, and how to invest with humility and confidence in equal measure. So settle back, get a drink, and get ready to discover more about why placing an oppositional bet on Elon Musk might result in severe losses. First things first, though, please subscribe and hit the like button. Remember to tell your friends about it. That being said, let's begin the video. Tesla has made some headway recently by cutting the wait period for the delivery of its Model 3 and Model Y cars to only 1 week, despite the ups and downs in the price of its shares. This is incredibly comforting information. The company's electric cars may see a sharp rise in demand as a result of the shorter wait times. Charlie Munger, the titan of finance, may have had a sudden change of heart regarding the company because of it. Charlie Munger lavished praise on Tesla in a recent CNBC interview, in spite of his prior misgivings about the electric vehicle market. He expressed his optimism about the company and his belief that its performance has beyond his expectations, commending it for its outstanding accomplishments in rapidly expanding. Munger even went so far as to call Elon Musk's Tesla an amazing accomplishment for the U.S. auto sector. Munger has previously criticized Tesla and Musk, so this endorsement stands in sharp contrast to that. Munger called Musk a remarkable fellow in 2018, indicating that he respects Musk's drive and entrepreneurial spirit. He did, however, also criticize Musk's actions, particularly his frequent use of social media to get himself into trouble. According to Munger's remarks, Musk need to exercise greater caution in his public remarks and concentrate more on managing his businesses than interacting on social media. Munger expressed doubt about Musk's aspirations for space exploration, particularly with regard to the goal of colonizing Mars. Munger has maintained that the project's expense would be unaffordable and its danger would be excessive. Munger's remarks are in line with the worries raised by certain industry insiders and investors regarding Musk's audacious goals for SpaceX and his aspirations for Mars colonization. Munger had doubts about Tesla's value in 2019, saying that even though he didn't know if the company would succeed, the valuation was high. Munger's remarks demonstrate his conservative approach to investing and his conviction that a company's worth should be determined by its fundamentals rather than by hype or the mood of the market. Munger has a history of making investments in businesses with solid fundamentals and room for long-term growth, notwithstanding his misgivings about Tesla. In spite of this, Tesla has become one of the most valuable companies in the world, with a market value that surpassed $600 billion in January of this year. Munger's reconsideration of Tesla's position demonstrates the company's noteworthy achievements and standing in the sector. This scene is still quite distinct in my memory. Munger had similar views on Elon Musk during the Daily Journal's 2019 shareholder meeting, although he also said he wouldn't hire the man directly. Hearing that Munger thought he would rather hire someone who knows their limitations than someone who doesn't was startling at the time. Nevertheless, Munger conceded that overconfident people can occasionally succeed greatly. This is where we should take a moment to consider Munger's statements carefully. He clarified that he didn't want to be around folks who are constantly winning big and are living in fantasy. Rather, he wanted responsible people in his personal life. A shareholder questioned Berkshire Hathaway Vice Chairman Charlie Munger about his opinions of Elon Musk and Tesla's recent ups and downs during the Daily Journal's annual shareholders' meetings. Munger's answer emphasized the value of self-awareness and striking a balance between humility and confidence. He conceded that Musk might be odd and occasionally exaggerate his own abilities, but he might also occasionally be correct. According to his remarks, Munger believes Musk is a strong man who shouldn't be taken lightly. Investors that think a certain stock or security is overpriced and will decrease in value employ the short-selling approach. When an investor shorts a stock, they borrow the shares from a broker and sell them right away on the open market in the hope of eventually being able to purchase them back at a cheaper price. The investor can then purchase back the shares at a lower price, return them to the broker, and keep the price difference as profit if the stock does indeed decrease as predicted. Due to the company's long history of controversy and conjecture, some investors feel that Tesla stock is overpriced and ready for shorting. At its height in 2021, short interest in Tesla was valued at about $47.8 billion, indicating that investors had borrowed and sold shares in that amount, hoping to repurchase them at a lower price down the road. Tesla shares, on the other hand, began a notable comeback in early 2023, increasing as high as 98% between the beginning of January and mid-February. Favorable news, including better than expected fourth quarter deliveries and a favorable full-year delivery outlook for 2023, drove this upward trend. Due to persistent issues, including supply chain interruptions and COVID-19 lockdowns in China, short sellers of Tesla saw considerable losses in the first few months of 2023, roughly $6.65 billion in mark-to-market losses. By assessing the current market value of the assets contained in the portfolio, the mark-to-market approach determines the worth of an investment portfolio. Notwithstanding these losses, Tesla's short interest currently stands at about $15.75 billion, or less than 3% of the stock's total float. This indicates that even though a small percentage of investors are still placing bets against Tesla, the quantity of shares being shorted has dramatically dropped, and the market's perception of the firm has generally improved. During this crucial period for Tesla, Charlie Munger has made additional remarks in public on the company. As vice chairman, he has been a major contributor to Berkshire Hathaway's success and has helped shape the company's investment philosophy, making it one of the most successful businesses in history. Munger offers wise counsel, and short sellers can confirm that wagering against Elon Musk can result in significant losses. Because of his life lessons and investment acumen, Charlie Munger is a highly esteemed personality in the finance industry. In passing, Bide and Tesla are two businesses that concentrate on producing electric cars, but they differ greatly from one another. The American business Tesla focuses on producing renewable energy goods and electric cars. Elon Musk started it in 2003, and its main objective is to hasten the switch to sustainable energy. Tesla specializes in electric cars and offers a variety of types, such as trucks, SUVs, and sedans. In order to facilitate the expansion of its fleet of electric vehicles, Tesla is also investing in the production of batteries and developing autonomous driving technologies. Tesla automobiles are renowned for their svelte styling, extended range, and excellent performance. Conversely, Bide is a Chinese enterprise that produces both rechargeable batteries and electric cars, solar panels, energy storage devices, and systems. Since its founding in 1995, the company has grown to become one of China's biggest automakers. In contrast to Tesla, Bide manufactures conventional gasoline-powered automobiles in addition to electric vehicles. The company manufactures trucks, buses, and cars as electric vehicle variants. Additionally, Bide has contributed to the advancement of autonomous driving technologies. Regarding financial performance, Bide is significantly smaller in comparison to Tesla's market capitalization. In April 2023, Bide's market capitalization was approximately $100 billion, while Tesla's was approximately $870 billion. In terms of sales, Tesla has also outperformed Bide, having shipped over 1 million electric cars in 2021, compared to Bide's approximately 530,000 deliveries. In general, Bide and Tesla are both prominent players in the electric vehicle market, but their approaches and areas of concentration differ, while Bide manufactures both conventional gasoline-powered cars and electric vehicles. Tesla is primarily focused on the luxury electric vehicle market. Although Bide has also shown success and is expanding in the Chinese market, Tesla has a higher market capitalization and has delivered a greater number of electric vehicles. Munger has stated that Bide is his all-time favorite stock, despite the fact that Tesla is more widely recognized and has a larger market value. Bide specializes in producing affordable electric vehicles and has a larger capacity for manufacturing batteries. Munger thinks that when compared to Tesla, Bide's Chinese production capability is practically absurd. A greater variety of models, including premium automobiles and trucks, are offered by Tesla, whilst Bide primarily concentrates on producing inexpensive electric vehicles. Munger drew attention to the fact that in China last year, Bide managed to raise car prices while Tesla managed to lower theirs. In Q3 2022, Tesla shipped about the same number of automobiles that it did in the entire year. With revenue of $454 billion for the third quarter of 2022, Tesla outperformed its peers by a substantial 55.95%. Munger has also released a warning about the financial markets, pointing out the overabundance of private equity and venture capital funding, as well as the misguided excesses of a few. He attributed the rapidly increasing global rate of inflation to components such as GameStop in the Bitcoin market, which he claimed were the result of financial market excesses. These excesses are driving consumers to spend more on commodities than they did a year ago. We appreciate you viewing our video about Charlie Munger's Tesla investment. Observing how well-known investors, such as Munger, shift their opinions about businesses over time is always interesting. Munger's admiration for Tesla has grown over time, which is a result of the company's remarkable achievements in the electric vehicle sector. As we've seen, short sellers who place bets opposing Tesla have had difficulties in 2023. We can all learn a lot from Munger's idea of striking a balance between self-awareness and confidence. Don't forget to click the like and subscribe buttons to receive updates on Wall Street Gain's most recent news and analysis.